When you are already doing the last 4 money columns, concentrate on the figures under the adjusted trial balance only. Ignore the first 4 money columns. Then, one by one again, from the first account cash to the last one below, the income summary account, ask yourself, where must this account be placed? In the income statement or in the statement of financial position? When you have answered your own question, forward the amount found in the adjusted trial balance column to that financial statement. For instance, cash. Where is cash found? Being an asset, it is found in the statement of financial position. So, forward this 250,000 debit to the debit side of the statement of financial position. Then, proceed to accounts receivable. Then, to allowance for budgets. And so on and so forth. Until the last account, income summary. But I'd like to point out some important things here. First, with regards to the withdrawal or drawing account. These Benipayo drawings. This account, as you may already know, must actually appear in what financial statement? In the statement of changes in owner's equity. But since we do not have columns for the statement of changes in owner's equity here in the worksheet, this 35,000 pesos debit balance under the adjusted trial balance must be forwarded to the debit column under the statement of financial position. Because strictly speaking, the account name drawings is part of equity, being the opposite of making an investment into the business. And equity is found in the statement of financial position. That's why again, forward the amount of Benipayo drawings which can be found under the debit column of the adjusted trial balance in the worksheet to the statement of financial position, debit column, and not to the income statement. Another important thing is about this merchandise inventory. This merchandise inventory end and this income summary, which I all highlighted in yellow. This merchandise inventory of 455,000 is actually the beginning inventory of the year 2019. Where is merchandise inventory beginning found? Is it found in the statement of financial position? No. What appears in the statement of financial position is the merchandise inventory end, not merchandise inventory beginning. Merchandise inventory beginning is part of the computation of the cost of goods sold or cost of sales. Remember, merchandise inventory beginning, add net purchases to get the cost of goods available for sale. That is why this 455,000 beginning merchandise inventory must be forwarded to the debit column of the income statement in the worksheet. How about this merchandise inventory end? Where is this account found? In the statement of financial position or in the income statement? Actually, in both the statement of financial position and income statement. Merchandise inventory end is an asset and therefore it is found in the statement of financial position and its normal balance is debit. That's why this merchandise inventory end here amounting to 245,000 must be forwarded to the statement of financial position debit column. How about the merchandise inventory end in the income statement? What is its normal balance? Recall that to compute the cost of goods sold or cost of sales, merchandise inventory beginning, add net purchases to arrive at the cost of goods available for sale. Then, less or deduct merchandise inventory end. From that, we know that if the normal balance of purchases is debit, then the merchandise inventory beginning, which is added to the net purchases, must also have a normal balance of debit. And from that cost of goods sold computation, we also must know that since merchandise inventory end is subtracted from the total of merchandise inventory beginning and the net purchases, then the normal balance of merchandise inventory end in the income statement must be the opposite of the normal balance of merchandise inventory beginning and purchases. And therefore, credit is the normal balance of merchandise inventory end in the income statement. And that merchandise inventory end to appear in the income statement is represented here by this income summary account in the amount of 245,000. That's why notice this amount is on the credit column of the adjusted trial balance because the normal balance of merchandise inventory end in the income statement is credit. So this amount of 245,000 must be forwarded here to the credit column of the income statement in the worksheet. After forwarding each amount under the adjusted trial balance columns to the appropriate income statement or statement of financial position columns, the next thing to do is to get the total of each of the last 4 money columns. But this time around, the total debit and the total credit of the income statement columns must not be equal. Likewise, the total debit and the total credit of the statement of financial position columns must not be equal unless the business broke even, meaning unless there is no net income and no net loss. After getting the totals, get the difference between the total debit and the total credit of the income statement columns and write that difference under the smaller amount. Then add 2,540,835.50 plus 137,537.50 equals 2,678,375. On the credit column, 2,678,375 plus 0 equals 2,678,375. Notice, these two figures now must be equal. Because these are total figures, you have to double rule. Do the same procedure for the statement of financial position. Get the difference between the total debit and the total credit of the statement of financial position columns and write that difference under the smaller amount. Then add 2,450,750 plus 0 equals the same amount of 2,450,750. 2,313,212.50 plus 137,537.50 equals 2,450,750. Note again that these two figures must also be equal. And again, don't forget to double rule. And of course, another very important thing for you to make sure, this difference between the total debit and the total credit of the income statement columns must be equal to this difference between the total debit and the total credit of the statement of financial position columns. Otherwise, something must be wrong. In other words, these two figures must be one and the same because they represent the net income or the net loss.